Eicher Motors CV sales rose over 17% in December, and the private capex proposals for 2022 in India suggest that the demand for commercial vehicles might remain high. Mind you, it's for the first time that in 2 consecutive years, the capex proposals in India are over the 10 lakh crore mark, with 2022 nudging a figure of 20 lakh crores. Mr. Vinod Aggarwal, who is the MD and CEO of Volvo Eicher Commercial Vehicles, joins us right now for his thoughts on the space at large and, of course, the monthly dispatches for Eicher as well. Mr. Aggarwal, good having you. Thanks for joining in. Hope all is well. Happy New Year to you.
Same to you. Thank you so much.
So, a word on the December numbers. 17%. Was this a number that you would have budgeted for at the start of the month?
Of course, December was very good month for us, and we had expected good sales because it is always that when the model year change happens, that time the sales are good. So it was expected that December will be good, but of course 7,200 was even better than our expectations.
And how is the underlying momentum, Mr. Aggarwal? One would want to know if this can become a trend of sorts, if not already, or is it difficult to call it out looking at the general slowdown around the world?
If you look at overall commercial vehicle market, it is still in the recovery phase only. After 2-3 years of recession, the recovery started last year and towards second half of 21-22. And this year was, you can say, full recovery year, but still we are far away from the earlier peak levels of 2018-19, when the total industry size 3.5 ton and above. It was 557,000 in 2018-19, and last year it was around 343,000, which was pre-COVID period sale of 2019-20, almost a little bit higher than that. And then of course this year we will be somewhere between 2018-19 and 2019-20. So it will be still lower than 2018-19, but it will be higher than the pre-COVID year sales. So therefore, we are still in the recovery phase. We still have to touch the earlier peak levels for the total industry. But within the industry, some of the segments we have touched already the new peaks. For example, in the medium duty trucks or in the light commercial vehicles, sub 5 ton also, where we are not present as yet. So I think these two segments are going to touch the new peaks. As far as the heavy duty trucks are concerned or bus sales are concerned, we are still away from the earlier. So therefore, this first of all, this quarter 4 of 22-23 is likely to be good, and then we also expect that 2023-2024 should also be better for the CV industry.
What are the reasons? I mean, one is, of course, when I look at the private capex numbers and I've not accounted government capex, then capex probably might be strong. But is that the single biggest factor, or are there other reasons for your optimism?
The single biggest factor is the pent-up replacements. Because of the COVID, 2 years of COVID, industry was down quite a lot. And sentiments are also down. When the sentiments are down, the transporters don't buy trucks. Therefore, if the replacements were due in 2020-21 or 21-22, those replacements didn't happen. These are happening now, or this will happen next year. Therefore, there is a lot of replacements which are overdue. The trucks which have already lived their useful life, they need to be replaced. And there is another reason of replacement is that the new trucks, BS6 trucks, or the continuous improvements that are happening in the trucks, they are much more productive. They are 100% connected, and there are a lot of new features. They have been designed to take care of the payload norms, new payload norms, which were announced a few years back. Therefore, these trucks are better productivity-wise, and overall cost of ownership is less. That itself is a good reason for replacement. So I would say the single largest factor is the replacements, and then of course the infrastructure investments and the capex that you talked of, I think that is another reason, because when the new projects are coming up, new investments are happening, you need more trucks to do the construction activity, road construction or coal mining, or iron ore mining is also doing better now with the exports again opening up for the various steel products. So therefore, I think replacements plus infrastructure investments and plus overall economy. If you look at overall economy, if you look at e-commerce segment, if you look at auto industry itself, like passenger cars are going to touch a new peak this year itself. So therefore, overall economy is doing all right, and that's the reason of growth in the CV industry.
Yeah, I mean, e-way bills, I think for the month of November were up a sharp 32% as well. So you reckon it's a factor, I mean, fleet utilization, road construction, pickup in cement demand, iron ore and other projects, all of these put together could ensure a strong quarter 4 as well, you reckon?
Mm-hmm. We are expecting that.
Okay. The other question, Mr. Aggarwal, would be the benefits that come into companies as a result of input costs rationalization. What are your views on that front for the calendar 2023? Because 2022 would also have the high base against which the commodity costs might have cooled off. What are your thoughts on those factors?
I think it's a good relief for the industry that the commodity prices have cooled off. But if you look at still the current commodity prices, they are way above the prices which were there around 2 to 3 years back. If the steel was hovering at 36, 37 rupees, like Eicher steel or the flat products, if they were at 36, 37 rupees per kg, currently they are at, after cooling off, they are at still 57, 58 rupees a kg. So which is quite a high inflation. Therefore, industry has never been able to pass on this type of inflation to the final consumers. And that is why you see tremendous stress on the margins. And now the current cool off that has happened from levels of 72 or 73 rupees per kg. So basically it's some relief, but the prices are still high.
That's true. Okay. Last couple of questions. One is it possible to gauge what's the kind of, I mean, in terms of percentage terms, ballpark, what's the extent of growth that is possible either for the industry or for VECV 2023 over 2022? Because I heard you say that quarter 4 might be strong. I heard you say that FY24 might look strong. So I'm just trying to understand, how is the calendar year poised like?
You are talking about now 2023 calendar year.
Yes, please.
Because we operate mostly on the April to March.
Okay, let's do April to March. How do you envisage FY24 or FY23?
First is 2022-23.
Okay.
2022-23, including the quarter 4. I think that growth levels are already very good. If you look at first 9 months, the industry has grown by almost 49%, 3.5 ton and more. I'm talking of 3.5. I'm not including the smaller trucks where we are not present. So the industry is already growing. However, quarter 4 growth will not be as high because the base impact will have the impact on the overall growth. Last year itself, quarter 4 was very strong, like 22 Jan to March. It was very, very high sales in that quarter. Due to that, this year, Jan to March quarter, there will be growth, but growth rates will not be like that we have experienced in first 9 months. So same is the situation going to be next year. Next year, again, growth will be there, but we will not experience very high double-digit growth. Maybe it will be double-digit, but it will not be very high double-digit. So we are expecting growth, but the growth rates will slightly come down.
Got it. Sir, one final question. Like I mentioned at the start of this interaction, it's not very often that we see such high private capex proposals in India. In fact, as statistics say, probably 2 consecutive years of over 10 lakh crores hasn't quite happened in a really long time. To your mind, what's the implication of such a thing on demand? Does demand come with a bit of a lag when private capex is unusually high, or is it difficult to call that out? or is it dependent upon how much of this proposal, how many of these proposals actually come to fruition? How do you look at this from a CV demand perspective?
I think the first of all, whenever this type of capex happens, that is very good for the economy. Because when you are incurring so much developmental expenditure, it means economy is on the upswing. And if you look at the government's announced plans, that they are talking of $5 trillion economy. If currently we are at 3 trillion, so next maybe 3 years we are targeting 5 trillion. If that has to happen 3 to 5 years, I think that is going to be very good for the CV industry per se. Because when the economy grows, you need more trucks. When there is more economic activities, you have to move more goods, and the passengers also move more. So you will see more and more growth, or more and more growth avenues for the CV industry. So therefore, this capital expenditure which the government is planning, this is a very good step. And let's hope that we still have this type of capex happening, growth related capex. And another good thing is that if you look at the tax collections, if you look at the GST collections, it's happening consistently around 150,000 crores every month, which is a very good figure. If you look at even the direct tax collections, I think they are also growing very well. So government finances are relatively better, I would say. And we expect that they should grow more, because if the economy grows, there will be more GST collections. And since the economy is also more and more digitalized, so therefore the tax compliances also are going up. So revenues are also expected to go up due to more tax compliances. So therefore, I think we are all in a virtuous cycle, which is good for the economy. And
but there is no such thing about capex of such a high magnitude necessarily leading to an uptick in particular period for commercial vehicles, or is there?
No, this will be good for the CV industry, as I mentioned.
It will be, but there's no. I mean, it can be good.
And there are two reasons. One is that I mentioned the CV industry still has to go back to its earlier peak.
Sure.
That is the first milestone. And after we reach that milestone, then of course the economy will pull the CV industry further up, because you need more trucks. If the economy is growing, how do you take care of the needs of the growing economy? If there are real growth rates of 8%, 10% in GDP every year, it means you have to move that much more goods. If you have to move that much more goods, you need more trucks, and there are more requirements of productivity, timeliness, cost of logistics. When you have to meet those requirements, again you need more efficient trucks. So
I'm listening to a bullish. I'm listening to a bullish CEO.
No, we have to be optimistic. That's how we have to drive optimism.
Sure.
And that's how the sentiments have to remain positive for the business to happen.
Well,
and
I hope it's even better than that, Mr. Aggarwal. Truly.
So far, in fact, I am very content that whatever I have mentioned about the industry, it is absolutely going as per that.
Let's hope it lasts. But thank you so much for talking to us today, Mr. Aggarwal, and all the best for 2023.
Thank you.
And viewers, thanks for tuning in.